Hi there, welcome one and all. Welcome one and all. Welcome to another live webinar with us from Phillip Nova. And who do we have in the studio today? We have two very special guests, one from Nikko Asset Management and the other from premium EV luxury car, Ola. And today we'll be learning more about the EV sector as well as the China EV market and the future mobility sector as well. Coming right up on your webcam is none other than Ola. And we also have Kelvin in the studio. He should be joining us very shortly. What will we be covering today? Let me just walk you through what we will be covering. As we know, the topic today is it's a fireside chat on the Nikko AM China Electric Vehicles and Future Mobility ETF. The China EV and future mobility industry is one of the most enduring growth sectors in the tech scene today. This is an emerging industry, highly sought by investors both in China and globally. However, does the current broad market equity weakness present a potential entry opportunity? So in this webinar, we will hear from Kelvin Yeo, ETF Business Development Director with Nikko AM, and Ola Bernhardtz, Strategy and Business Development Manager at premium EV brand Polestar. And let me tell you a little bit more about our speakers. Kelvin, he is responsible for driving the growth of Nikko AM's ETFs business in Southeast Asia. Kelvin promotes the firm's ETFs in Singapore, across the region, and part of his job includes deepening client engagements, nurturing the ecosystem to foster healthy trading liquidity on the stock exchange. Prior to Nikko Asset Management, Kelvin was with AJ Capital Management as a multi-strategy, multi-asset senior analyst with broad global equity coverage across energy, banks, real estate, technology, and consumer sectors. Ola is the Director of Business Development Asia Pacific, excluding China, for Polestar. And Ola is responsible for business development in the Asia Pacific, delivering a market expansion agenda and program management across all APAC markets outside China. Alongside expansion and business development strategies, Ola, part of his job includes building productive partnerships, new revenue and business models. The most recent accomplishments are to launch 4 new markets in the region: South Korea, Australia, New Zealand, and Singapore. And I'm sure you're very excited to hear about Polestar from Ola. So Ola, if you are all set to go, I will give you sharing rights right now. You can set up your slide. Actually, do you see a prompt on your screen to share your slides?
Yes, thank you very much.
Yeah. Before we begin, I'm just going to do a quick poll. I just want to do a check to see if the audience can hear us loud and clear. So if you can hear us loud and clear, please type yes in the poll. And if you can't, please replug your headset. That normally solves the issue. So let's do the poll right now. Members of the audience, can you hear us loud and clear? All right, we have 100% for yes right now. 67 with a yes, 33 no. If you can't hear us, I highly recommend you replug your headset, and that normally solves the issue. It's probably some glitch that you're experiencing at the moment. All right, great. 92% with a yes, and we're good to begin. All right, Ola, if you're all set to go, I'll hand the reins over to you. Let's hear more about Polestar.
Perfect. Thank you for the introduction, Sri. As mentioned, I'm heading up business development in Asia Pacific, and I'm here to talk a little bit about Polestar. And not jumping into corporate lingo right away, I want to start with this beautiful original sketch. We launched Polestar in 2017, starting with the Polestar 1, which I'm presenting here to you. Originally based by another car brand, Volvo Car, and their concept coupe. And why I'm showing this is because it ties into our roots, Polestar being a spin-off of the perhaps then more well-known automaker, Volvo Cars. We launched Polestar 1 as a halo product for the introduction of the Polestar brand, manifesting the way Polestar will push the agenda for electric cars, and this time in the shape of an outstanding performance hybrid limited production series over 3 years. So then diving into Polestar and what Polestar is, we call ourselves the guiding star. We are an electric performance brand determined to improve the society we live in. Our focus is on uncompromised design and technology. Passion and emotion drives us. Electricity and innovation drive our cars. Our products are excellent, efficient, and entertaining. In Polestar's future, there is no room for shortcuts, excuses, or compromises. We are all in, dedicated on our ambition, guiding our industry forward through pure, progressive performance. At Polestar, the sky is the limit. So as you hear, we have 3 keywords that describe us, and that is pure, progressive, and performance. If we start with pure, pure is obviously flirting with the pure EV aspect of being a fully committed EV brand, but also in our design and how we manifest our brand. We focus on product minimalism in the making of the product and every touch point, marking, and how we produce and present our brand. Moving then to progressive, we are pushing the EV agenda, obviously. Innovation related to introducing new sustainable materials, the way we look at sustainability and circularity, and introducing new functions and features in our cars. And lastly, performance. Why that? We have a natural performance heritage and background, and we do value this a lot. So in every car we develop and build, we put strong and big effort and time to refine the performance attributes of the car and the drive. And this also shows by, for instance, partners and suppliers we're working with, such as Valuations and Brembo. Looking at Polestar and our footprint across the globe, our global headquarters is situated in Gothenburg in Sweden, where I'm originally from. Today I'm based in Shanghai in China. We have an R&D center in the UK and production facilities both in China and coming into North America and in the United States as well. So ranging from Chengdu, Taizhou, and South Carolina. When we talk about the first launch markets for Polestar, we from the onset launched with the global scales, ranging from China in the east to the Americas in the west. 7 European markets were added, as you can see here on the list, and during last year we rapidly expanded into new markets, and actually we mentioned 4 of those which I've been responsible for establishing, including the Singapore market. Now as well, recently entering Hong Kong market, many more in the European and Middle Eastern region to come as well. So Polestar has quite a wide footprint for being a very, very young EV maker, as you can imagine. So calling ourselves a truly global car company from very early on, reaching for 30 markets by end of 2022, 3 manufacturing facilities, and over 1,500 global employees. So back a little bit to the exciting parts, namely the cars. We showed our first fully electric car at the Geneva Auto Show after a digital launch from our HQ in Gothenburg in 2020, and that was the Polestar 2. Polestar 2 is a C-segment fastback, which we are immensely proud of, and that has won Car of the Year award in almost all markets we're present in, and we couldn't be more excited scaling the brand with this car. Now, of course, there is more to come from Polestar, and last year we actually announced an extended lineup with more models to come in the coming years, and what we introduced as a start was the Polestar preset. This is the Polestar preset, and not only did we reveal it as the picture you see here, but also announce the commitment to actually put this car into production and launch it as a production car coming to the markets in the near future. In addition to that, we earlier this year in Los Angeles announced the Polestar 02. This is a roadster with retractable roof and also featuring a drone, which is really exciting. So you can film while driving as well. So by this, we are really showing our commitment going forward with several products in the lineup, moving into actual car programs and building with scale. But in the very near term, next out is another car, and that is the Polestar 3, which we are extremely excited about. This will be a sporty aerodynamic SUV, and it will soon be revealed as mentioned. So stay tuned for more info about that, and also when it possibly comes to the Singapore market. Not to drag on too long, thank you very much for listening to my presentation about Polestar, and hope you enjoyed it. Thank you.
All right, thank you so much, Ola. Well, based on what I've seen so far, I wouldn't be the least bit surprised if this car was featured in some futuristic movie coming our way to the cinema. And thank you so much, Ola, for walking us through Polestar. I'm very excited to see more and more news and updates from Polestar. All right, Calvin, you're up next. If you're all set to go, I can hand the reins over to you, Calvin.
Just thank you very much. Sure. Thank you very much, Sri, and thanks for kind of transferring the rights to me. So let me just show my screen. Just give me a second here. Just want to make sure that you can see the slides.
Yes, I can.
Okay, great.
Yeah, it's good now. Thank you.
All right, thank you. All right. So thank you, everyone. So this is Calvin here, and like the presentation topic, what we'll be talking about today is on China electric vehicles and future mobility. I think most of you are aware that Nikko Asset Management, we listed our China Evfm ETF on the 20th of January, just early this year. I think for those who are unfamiliar with the ETF, I think it's just useful to very quickly go through some key product specs, what I'm actually going to cover here. And this is really some of the ETF specs. Like I said, we listed it on 20th of January this year. We listed it at about 45 million Sing. Markets have been difficult for us, and we are down about 20-30%. And really, this webinar is really kind of to talk more about that later on, right? And the underlying index that the ETF tracks is the MSCI China All Shares IMI Future Mobility Top 50 Index. For those traders out there, this ETF trades on the Singapore Exchange in two different currencies, Sing dollar as well as US dollar. The Sing dollar ticker is EVS SP, and the US dollar ticker is EVD SP. Sorry about that. Okay, and the total expense ratio is 70 basis points per annum. I'll jump very quickly to give everyone a snapshot of the returns so far since the start of the year. You will see here the price and NAV has come down. The ETF was listed at $1, and the many factors that's driving the downward performance. And we'll really talk a little bit about that later on. In terms of on-screen volumes, you can see here that the weekly traded values have averaged around 500,000 per week in the chart below. So still fairly liquid for a small ETF, but I think generally when we talk about ETF liquidity, it is the underlying liquidity that really matters, because in the primary market we can always tap on that. So in terms of what investors are being exposed to when they invest into this ETF, here is a snapshot of what we're trying to cover on the various themes that the underlying index gives you exposure to. So there are 5 sub-themes that investors will gain exposure to: battery, smart mobility, sharing economy, high-speed transport, and vehicle automation. Now that also captures a lot of various more finer value chains. You can see here on the right side of the diagram, from batteries, packaging, to recycling, to driverless cars, ride sharing, hydrogen cars, and even autonomous driving. So this is essentially, by index design, what the ETF tries to capture from an investment thematic perspective. Moving on to the next slide, I think just to give everyone a sense of some of the companies that are being captured within the underlying index that the ETF tracks. Here are some of the top holdings. You can see here is contemporary Amperex Technology. That's one of the largest EV battery manufacturer in the world. There's also the EV manufacturers themselves, the car manufacturers like NIO, Geely, right? And so Polestar is really a company under Geely. And you have BYD, Eve Energy, XPeng. So some of them might be familiar to you, while maybe a few might not be so familiar, but they're all captured under the index that the ETF tracks. So I think a good way to kind of kick off the main part of my presentation is really on this tweet by Joe Biden, the US president, as well as Elon Musk. And here you have Joe kind of praising in his State of Union address back in early March. He was praising Ford for building electric vehicles and contributing to job growth in the country. And of course, you have Elon being, cheeky as he is, kind of tweeting back, saying that Tesla has actually created much more jobs than General Motors and Ford combined. But I think the key message here is that the EV industry is a very important industry globally, not just for China, but also for the US and Europe. It is a strategic growth industry, and definitely it's an industry where a lot of jobs and value creation is being introduced into the economy. And here is a snapshot in terms of the EV car sales on a global basis. You can see here in the light blue part of the bar charts, that's really China. You can see that the growth of the electric car market in China has been the strongest over the past 5 years or so, and currently China does lead other countries in the world in terms of the EV car sales as well as market share. When we launched the ETF, we have many clients asking us, it's like, what's really the underlying drivers driving our interest in the China electric vehicle and future mobility sector? And there are really 4 reasons here. The first is really the policy support that the industry gets from the Chinese government. So this is a very strong tailwind, and we can touch on that later on. Number 2 is the domestic demand. I think China does have a very big domestic market to tap on in order to drive this new industry. Number 3 is the supply advantage or leadership that China has. It's got very large production capabilities, very deep as well. And all these really are the long-term secular drivers that is going to support the China EVFM sector. I think the 2 main policies in China that's really supporting the growth in this industry, and I just briefly mentioned that. The first is really the State Council Blueprint that was released back in November 2020, and that advocated for the development of the new energy vehicle sector for the next 10 years. Right? There was a target for EVs to be 20% of new car sales by 2025. I think we have already hit the target this year in 2022. Right? And the second policy is really the 14th Five-Year Plan, which states that EVs will be one of the strategic emerging industries that will account for China's GDP, or account for 1/5 of China's GDP by the year 2025. This is an interesting chart for the shorter term investors out there. I think it's quite meaningful as well. This chart here shows the total number of plug-in hybrids as well as battery EVs that's being sold in the Chinese market on the monthly basis. And you would see here that since the release of the two major policies in China, the number of EV vehicles sold has started to pick up since the start of 2020, right? And right now, the number of vehicle unit sales is growing at over 100% year on year, which kind of reflects the very strong momentum that we are seeing in the market today. Of course, entering March and April, where there are heightened geopolitical risk between Ukraine and Russia, there is expectations that the number of unit sales will start to slow down, at least sequentially into April. The market is watching into that, but we'll come to that during the Q&A. So just to talk a little bit about the consumer market in China, I think the first point here is that the EV penetration in China is still very, very low today at under 10%. If you look at 2020, I think the China EV penetration is roughly about 7%, and this really provides a very long runway for growth in the country itself. In terms of what has been selling really well in the Chinese market, at least last year, have been mini EVs. These are very small, dirt cheap EVs that cost just under 10,000 USD. They don't travel very fast, and they run on very cheap batteries. And this is an interesting market that is growing within China. And of course, later on, you might have Ola kind of comment for us how the premium market, is developing in China, and perhaps that will be a segment that can potentially pick up over time. So this is just another picture of the Wuling Hongguan Mini EV, which is probably the cheapest that we know of, only 5,000 USD. And that has been the best-selling EV model in China, at least back last year in 2020. So I'm talking a little bit about China's supply-side leadership. Why it's so interesting? I think this is a busy chart, but there are just really a few key points that I want to share with everyone. I think China, relative to the US and Europe, is in a very good position to kind of lead or even capture the growth in the EV industry globally. You can see here first, they do have major market share in terms of the number of EV units that are being sold, right, and produced. Likewise, on the battery front, by the sheer number of vehicles that are producing, they also lead in terms of battery production. And if you look at the number of public charging facilities that they have, and this is really important when it comes to promoting growth in the EV sector, China has a very strong focus in terms of building out this particular infrastructure. And I think just recently they announced that by 2025, they'll be kind of populating 80% of all their highways with charging points. And interesting aspect of China does have dominant share in terms of lithium-ion battery production. They account for about 70% of global production, and this does put them in a very good position, at least on a scale basis, relative to the US or even Europe. So, I just want to touch a little bit on the underlying index, which the ETF tracks at this point. And, I think given the market sell-off recently, a lot of our clients do ask us, what we are actually seeing in the market and what we think about valuations. Here is a chart on the forward price earnings ratio of the underlying index that the ETF tracks. You will see here that on a 3-year average basis, this sector trades about 38.4 times. The valuations did go up quite a bit into a premium space sometime at the start of 2020. It's kind of hovered at about 40-50 times for the whole of last year, right? And it is only really in the start of this year that the forward valuations started to come down. So as of 22nd of April, the sector is trading at about 35 times, 34.4 times to be specific, right? And this is at a point which is under its 3-year average at the moment. If we kind of look deeper into valuations for the China Evfm sector, I think what gives us comfort is the underlying earnings growth of the entire sector. For those of you who might not be aware, this is probably the year where the entire sector will start to turn profitable So if you look at 2021, actually earnings were still slightly negative on an aggregate basis. So starting from this year, for the next 12 months, we are looking at about close to 65% earnings growth on a year-on-year basis, rolling 12 months. And if you kind of look into next year, earnings growth will be about 50%. So fairly robust earnings growth still within the sector. And that would bring forward valuations down from about 34 times to just about 24 times by the year 2023, which is undemanding in its own sense. So with this, I just wanted to give everyone, that short and brief context into the China Evfm ETF that Nikko Asset Management has launched. I think, we can definitely explain a little bit more during the Q&A session.
All right, thank you so much, Kelvin, for the wrap up on the ETF, China mobility and future mobility rather, and China EVs sector. And right now is the moment that we've been waiting for, is a fireside chat. I'm going to be firing away with questions. Members of the audience, you can participate as well. All you need to do is go to the question box, which you see on your control panel. It's somewhere at the bottom. You hit down there and type in your question, and we will address them during the Q&A session from the audience. Okay, but first, let's do the fireside chat right now. We have a very exciting poll for you to participate in later, so do look out for that as well. My first two questions is for Ola. Well, we've heard from Kelvin and why he thinks the EV sector is going to take off in the near future with, with a more emphasis on climate change and sustainability, and EV playing a bigger role in countries worldwide, as you can see from the tweet from Biden. Saying that there's a whole lot more of jobs coming up in the sector in the near future. What are your thoughts with regards to where EV is headed and why it's so important?
Thank you, Sri. So I think one of the obvious ones, or the main one actually, is the climate impact that automobiles are having. Obviously, the EV sector will not and cannot stand on its own to drive the change, but is absolutely a catalyst and an important part of the transition into a more sustainable way of living. And I think traditional automakers, legacy automakers, cannot neglect the fact and the space that we saw as well, a prominent person, Elon Musk, tweeting and taking space and market share from traditional automakers with introducing sustainable mobility, shift to electric mobility, and therefore the rest of the automobile sector as well see that this is the time to follow, and ideally as well take a part of the game and lead the change. So I would say those are key things to mention.
Hey Ola, I believe Kelvin briefly mentioned this Geely, Polestar being owned by Geely. Would you be able to share a little bit more about Polestar, maybe a quick snap summary for the members of the audience to understand the brand better?
Absolutely. So Volvo Cars is a quite well-known automobile manufacturer that is currently listed on the Swedish Stock Exchange, but a majority shareholder is the Geely Automobile family, being partially owned, and Polestar partially owned by Volvo Cars and Geely, were subsequently a part of this group umbrella as well. Recently we announced some interesting plans for ownership going forward. But the benefit of Polestar is that we're combining sort of the agility and the speed of a startup and the support and backing of two very, very prominent and stable automakers in Geely and Volvo, which we're immensely happy about and proud of. So we can leverage manufacturing, we can leverage supply chain parts of R&D where we want to have scale of economy with these two automakers, while at the same time being able to operate on our own and drive our agenda forward.
All right, so there's going to be shared expertise, and it's not just Polestar, but Polestar will be working very closely with Geely and Volvo to develop technologies as well. Yes, that's a very interesting piece of information about the brand. For members of the audience, if you want to see what a Polestar car looks like, I was just telling Ola earlier, along Bredel flyover, you'll see a huge out-of-home billboard banner just beside the expressway. So just keep your eyes peeled and you'll see the out-of-home banner. Do look out for that. Well, my next question, jumping onto the Chinese market right now, we've had a whole lot of tailwinds in that sector with the COVID to lockdowns more recently, and statewide testing of the citizens in the state that's under lockdown, and a number of delisting scenarios happening in US exchanges. How will these factors impact the EV stocks, and what is the impact of this on the ETF, the China vehicles ETF?
Yeah, sure, Sri. I think maybe I was expecting a question like that, and I do have a backup slide that kind of helps to frame the answer.
Sure.
And if I could just,
can I give you a sharing?
Yeah, can I just share my screen again?
Yes.
Okay, sure. I'll just share my screen again here, and maybe I'll just show kind of this slide here. Just let me go there. Okay, this is it. Right. I tend to show this slide to most of my clients just to give them that perspective of what's kind of really driving the sell-off in the China EVFM market. And there are really two phases here. So what I did is to show this. The bars here essentially shows the price returns of every single constituent company within the underlying index, so there are 50 of them. And the two different colors really shows the returns between two periods, right? Since the start of the year. So blue color is really year to date into February, so the first 2 months of the year. And what you can see here is quite interesting. If you recall, when we entered this year, the biggest factor that was weighing down markets was really the rate hike, right? And the rate hike didn't really derail the Chinese market, at least from the perspective of the EVFM, China EVFM market. But where the weakness was really in the large caps. So you can see the left side of the chart here, the blue bars that are being sold off, about 20%, 20 to 25% max on some of the large caps within the underlying index. This was where rising interest rates and higher inflation really hit the China EVFM sector. Right. In fact, the rest of the sector, and mainly all the A shares, they were not so badly hit. The change really started to happen when we look at year-to-date returns into the 4 months of the year, essentially when we factor in the last 2 months. And you can see that there was a very material flip in the return profile, and every single constituent company within the China EVFM sector went red. And the negative returns were quite consistent, anywhere between negative 20% to negative 40%. So for the smaller companies, because this chart is large cap on the left and small cap on the right, you can see that the sell-off was even heavier, tend to be heavier on the small cap side of things, right? The smaller market cap companies. And the signal on this is that the sell-off in the last 2 months was very much macro-driven, right? There is very serious concerns in the marketplace of the post effects of a US-Ukraine conflict. And so Sri, I think you have very much you have mentioned this earlier on, that there is a sell-off. There is some supply chain disruptions in China due to the COVID lockdown and everything. I don't think the market is factoring this very much, right? Definitely not as much as the repercussions that can happen from the US-Ukraine conflict, which is basically driving up commodity prices. And that has a fairly large impact on the sector overall. So that's the main risk that we're watching.
All right, thank you, Calvin. My next question is, one of your slides, which I found really interesting, was the slide on the battery makeup. What China is using, what Europe is using, what the US is using. Let me just tell you a little story from my past. When I was in school, one of the technologies that we had worked with in the radio studio was mini disc. Those of you who are in my age group or older, you probably know what a mini disc player is. So once I graduated, technology has moved on, and the mini disc is not relevant anymore. So my question to you is, well, we know EV is going to be huge in the vehicle industry. Pretty much climate change is the big issue that countries around the world are dealing with. So what about the battery components? Should we be concerned about certain type of batteries, or what China and not the US is using is the one that we should be focused on as the likely winning horse in the battle for batteries in the future? What are your thoughts on that? And are material prices going to go up? Because there's going to be a surge of demand. Can the suppliers keep up? Because you're going to have so many of the traditional vehicle manufacturers pivoting to the EV sector. So what do you think about material costs, as well as what are your thoughts on the battery makeup?
Yeah, I'm definitely not a battery expert here. I have some views on that, but perhaps I want to tap on what Ola thinks first before I kind of go back into the slide that I have. I mean, just Ola, do you have any thoughts on the battery side?
You're on the spot now, Ola.
Yeah, no, absolutely. Thanks for that. So I think what we see now is sort of a kind of a limited supply diversity in terms of what goes into the battery. So we have certain minerals and components into the battery. Innovation has not come so far down the line, which means that we will work on a certain limited amount of resources. So I would just assume, and if I get to guess, that raw material prices would increase over time, yes. Although to counter that, we see a development in technology and utmost the efficiency of batteries. So the amount of components going into the battery, or what is required for producing a battery, might be less. So in terms of prices to consumer buying an EV, and also the average consumption producing components and constructing batteries might remain the same.
Right, and I think I can add to that, right? So if I kind of go back into my slides, just sorry for just kind of toggling back and forth a little bit here, but it definitely helps to have some diagrams to kind of go with the explanations. So I mean, I think Sri, you were really talking about this slide here, right?
Yes, that's right.
Yeah, sure. So I mean, first of all, from an investment perspective, the ETF is battery technology agnostic. To a certain extent, whichever company within the index is selling its battery well, and the revenues are growing and become significant, the index methodology automatically selects that company and it incorporates it as part of your investment. I think that's generally the beauty of indexing methodologies, right? But beyond that, I think what I wanted to talk about on this chart, which I didn't go into detail, but might be of interest, is that the China market is fairly unique versus the US and Europe, in the sense that they did, at least in 2019, 2020, based on data, the most common kind of battery technology was NMC. NMC meaning nickel, manganese, cobalt. And there was a reason for this, because these raw materials are just cheaper, right? Versus cobalt, or even to a certain extent other types of battery materials. And the Chinese typically use cheaper materials to construct their batteries, because the cars that are really selling very, very well in China are less demanding, right? They don't really need range. I mean, a lot of the best-selling models are short range vehicles, lifestyle vehicles. And that's why there is that focus on NMCs. Increasingly in recent years, there's a shift towards LFPs, lithium iron and phosphate. I think this battery technology is also very cheap, right? But I think it has just slightly better range versus NMCs. And this is really the shift that we are seeing. And the interesting thing here is that the China market being very different allows them to take a whole different technology development route versus what we are seeing in the US and the Europe. And we like that because the Chinese market is able to dictate their own standards from a battery technology perspective. And if just to answer the third part of your question, in terms of rising cost, yes, in the past 2 months, we have seen raw material prices rise on the battery front, as well as across the whole supply chain, right? So what the EV manufacturers have done, and perhaps Ola would have sensed that as well, is that they are starting to pass on those costs onto the consumers, right? From an investment perspective, that's not good, right? Because unit sales is critical in the Chinese market today. I mean, all investors are looking at unit sales. The moment unit sales slows down, the stocks get hit, especially the EV manufacturers themselves, the brands, right? And but that's what we are seeing, right? And it doesn't help that Shanghai is under lockdown. It's like Shanghai accounts for like 20% of automotive supply chain production in the country, right? So all this confluence of factors have hit the sector quite hard. Sentiment in the near term is quite, I would say, at a low point, right? But it also means that from a tactical perspective, the sector has probably sold off a lot more than it should, right? If you recall the first part of my presentation where I was talking about the two phases of the sell-off, first there's the rate hike, that's one big macro factor, and then there's the Ukraine-Russia conflict driving up commodity prices. Those two are probably more lasting trends, but the lockdown in Shanghai, that will pass, and supply chain, disruptions due to within in Shanghai and the region will ease up over time. So that's where the dislocation might normalize a little bit.
All right. Thank you so much, Kelvin, for that insight. Well, my clock says 7:42 right now. Members of the audience, it's your time to fire away right now. Okay. Head down to the question panel and type your questions in there. I see some questions already, and I will be fielding them, the questions, and you will get all the answers to your burning questions. All right. The first one is for Ola. As with most EV cars, one of the main things that investors like to take note of is whether the brand has started delivering and whether cars are out there in the market. Would you be able to share the delivery plans, or maybe how many cars are already in the market for Polestar? And a follow-up question from me, I'm curious to know, with EVs being such a big thing in the future, how long would it take to charge an EV car? I mean, maybe from your experience in Polestar, would you be able to share more?
Yes, thank you. So if we start with the first question, I guess looking at sales figures and how many cars are out there, depending on if you take the country of Singapore, where we fairly newly launched together with our prominent partner, Warns, based on 45 Lenki Road, you will see quite a few Polestars on the road in the coming months. I would say quite well received in the Singapore market, and happy to see consumers adopting EV so quickly. When it comes to our sales performance in 2021, we reached north of 29,000 units sold in our markets across the globe, and that was a year-on-year growth with 185% from the previous year, which was ultimately our first year in operations, you could argue. For this year, we have quite substantially higher ambitions as a company, but given the state we're in, I cannot reveal sort of more on the figures as we stand today and what our projection is for the full year.
Ola, just to jump on your response earlier, which sector for Polestar is growing the quickest? in terms of
sorry, could
countries
you
Polestar is in?
which market you mean, or?
Which market?
Yes. So I would say overall the European market is a very strong and mature market right now. I would say governments in, for instance, Norway led the way very early on. Norway being called the EV capital of the world, with very strong incentives and tax policies connected to buying an EV. Which has been the driver, and then reflecting in many of the other European markets. So I would say that's key. We also see a big pickup in the US, I think, substantially thanks to Tesla, driving that shift. And then now the other American automakers coming in strong with both startups in that segment, with Rivian, for instance, and the traditional automakers, Ford, GM, etc., following and even reintroducing brands such as the Hummer brand as fully electric, which is absolutely fantastic and exciting. The Chinese market, I mean, Kelvin has talked about that through his presentation. That is still the main driver behind the growth, both from an auto market in its whole, shifting from sort of low-end vehicles to premium or medium segment, and also the shift to electric. I mean, that's where we see a very, very big shift. The markets I've launched out in sort of the wider Asia Pacific, Korea is a very, very mature EV market, I would say, as well, strongly incentive driven. You have the domestic players, which are very well equipped to drive technology advancement and sort of battery power and in terms of how much range they deliver. And then the consumer is as well very mature and aware of transitioning from a traditional combustion engine to the EV in the premium segment, where you have the Germans and you have the domestic brands, and even then us competing. So truly exciting opportunities out there, and really seeing that shift in many marketplaces, I would say.
Yeah, it is quite heartening to hear from Ola, kind of talk a little bit about the growth in the different geographies, right? Because if from a product perspective, we usually only focus, at least myself, I usually only focus on China itself, right? But it is really quite heartening to know that this is a global phenomenon, right? You have sales kind of growing in all countries, and perhaps it's also, I just think out loud, also a reason because this is just so new. Penetration is just under 10%, and as things pick up, I think there is a lot of real traction that is happening in the marketplace.
All right, so now on to some questions from the members of the audience. We have a question from Raymond. He's asking, right now, as you mentioned earlier in your presentation, because of the market sell-off and the Ukraine and Russian war, the price of the index has moved downwards. Where do you think the prices will head, or are there more catalysts to drive it higher, or will the war be a key player in how soon the prices will be heading upwards?
Yeah, I mean, I can only speak from a personal perspective. I mean, it's just very difficult to time markets or even have any kind of forecasts. And from an ETF perspective, the ETF essentially only tracks the market performance. There's no active management, there's no investment call, right? But I think in our conversations with clients and partners in this sector, the sell-off is quite done, right? So I would say that we are fairly near to a bottom. A lot of the negatives have been priced in, and I say that only in relation versus to good fundamental data that is still coming out from the sector. And that one of those fundamental data is really the earnings growth, right, and the sales numbers, right? I think even until the end of March, we are still seeing about 158% year-on-year growth in China overall in terms of EV sales, right, for the first quarter of the year. And the earnings growth expectations are still very strong, as I've shown earlier on, just over 50% a year, right? I think what there is that risk that in the month of April or even May, there might be some sequential slowdown. So I think the overall market will be looking towards that. But when we look out over the next 12 months or next 24 months, the current sell-off does provide some opportunities for investors to enter the market. I think in this market condition, it's very often it's more the trading strategy that you employ that matters a lot more, right? I mean, if we have investors who went in and the risk that they take is very large, they might be hurt a bit much more than if they were to kind of perhaps split up their allocations and right-size their investments over time.
All right, thank you, Kelvin. Next question is from Vincent. He's asking, there's been quite a bit of news about NIO delisting in the US market, and how much impact will be on the ETF should NIO delist from the US, or is there any even?
Well, the impact on the ETFs is going to be small from a delisting perspective. In terms of index weight, I think only four EV companies, specifically the ADRs, they account for about 20% of the index weight, right? So that's really where the risk is really concentrated. Now, in most cases, we are not overly worried on the potential delistings. What will most likely happen is that if any of the index companies, let's say NIO gets delisted from the US, they'll get relisted in China or Hong Kong, right? At some point, NIO was even thinking of listing on SGX. So, but they do find their ways around, right, in order to get a listing. I think what's the key difference here is that there might be liquidity differences between trading on the US exchanges versus Asian exchanges. There might be a differential in premiums, trading premiums, right? I think generally the US market is bigger and more liquid. So, if you had an ADR listed there, your stock might trade at a slightly higher premium. So the premiums might change when you change your listing venues. But all this, are fairly, I would say, balanced out from an index perspective, because the highest weight for any one constituent within the ETF is only 10%, right? So, and all the risk will be a factor of that 10%, right? So diversification helps in this case by an ETF.
Ola, the next question that we have from Kui, he's asking, in terms of the technology for the batteries that you have in China versus US or the Europe market, is there a clear difference in technology for the batteries? Is there one that is deemed as higher quality or better grade or gives you more mileage in this case? Is there a clear difference, or more or less it's still a very early phase in terms of the technology, and there's lots more improvements ahead?
Yeah, no, but I think Kelvin touched on the main differences in terms of composition of the batteries, which ultimately will affect sort of the capacity of the battery, and the technology then that goes in per manufactured region or market. When it comes to Polestar, we have batteries produced from multiple geographies. So not only China, but Korea is also a big contributor to battery supply, which ultimately gives us that diversity into our range versions then. So the Polestar 2, for instance, is offered on a standard range single motor, long range single motor, and long range dual motor, which have different kilowatt output and different range then, which ultimately enables the customer to choose whether they want to perhaps spend a little bit more money on high power, high torque vehicle with longer range, or simply lesser range for the daily commute and perhaps so higher charging frequency, or if they live in a landed property or have charging ability at work, they simply don't need more than the lowest range sort of offered by the EV maker. But surely, I think the technology around batteries is definitely an area we'll see massive improvements and continuous development over the coming decade, and in terms of efficiency will drastically improve, and already has from the onset. If we just go 5 or 10 years back, what type of range you could get out of a battery compared to today has vastly improved. And given the pull from the markets, given the size of industry and the growth, I think it's clear to everyone we can expect much higher output from the batteries going forward.
All right. Okay. So, Kelvin, I'm gonna go to you first. What would be the key takeaway you want the audience to have based on what you've shared today about the ETF, the China EV market, and the future mobility sector?
Yeah, sure, Sri. I think, and I'll be honest about this. I mean, the single most frequently asked question by my clients is the negative performance on the sector. I think that everyone's very concerned about that from an investment perspective, right? And I hope I've addressed some of those concerns here by kind of breaking down what has been driving those negative returns. There are macro factors, from the interest rate hikes. There are macro factors from the geopolitics, which is driving higher commodity prices, and then there are very, I would say, concentrated events that have impacted the sector, specifically, like the COVID lockdown, and perhaps something that I didn't mention is also, if you look within China, they also have their own credit cycles, and China being the first country in Asia coming out of COVID, actually started tightening before everybody else, and that tightening cycle also had impacted the Evfm market domestically, right? Which is why for the next 3 months they'll probably start loosening again, the regulators. So many factors at play, and hopefully through this, I think it helps to give investors some comfort, why the sector is down, and hopefully in understanding better what has been happening, it gives our clients more confidence in terms of holding the position, or deciding whether or not they want to add.
All right, thank you so much, Kelvin. Ola, so what would be your key takeaway from the EV sector and Polestar?
Key takeaway, no, but I think something that might not seem so natural to anyone today is that I think if we look sort of 5 years ahead, don't even need to talk 10 years ahead, it will be very normal state for everyone to have tried or driven an EV, similar to how normally the driving a combustion vehicle 2 or 3 years ago felt. And I really urge the audience to go and test not only a Polestar car, but any type of electric vehicle. Once you spend a couple of hours in it, it's actually a truly joyful experience, and it's really a smooth and nice experience compared to a combustion car. Even as a car fan that I always have been, I really enjoy the sound of electric. So I think that's my final note to this chat.
All right, thank you so much, Ola. All right, before we go, as promised, I think it's very timely that Ola requested that we try an electric car. I have a second poll. All right. So would you consider rather buying an electric car, EV car, in the next 1 to 5 years? Let us know what you think. All right. Right now we have 100% in 5 years. For those, okay, it's 50-50. 50 on undecided, 50 in 5 years. What about the rest? I mean, doesn't it seem like EV is going to be very much part of our future? Let us know. Very interesting results. All right, just 5 more seconds before I share the results. Okay, let's see what we have here. Okay, well, that's our results for the poll. We have 6% in 1 year, 13 in 3 years, 25% in 5, 44 are still undecided, and 13 love their petrol cars, just like Ola. Okay, very interesting results. Well, your views could change very much in the near future as the market evolves and you see a lot more EV cars on the road, including Polestars. And well, that is how it seems like the sector is shaping up. If you have more questions for our speakers, the conversation doesn't need to end here. All right, there will be a survey right at the end of this webinar. You can send your questions in the survey and I'll reach out to these speakers and we'll get their views and you'll have your questions addressed. All right, thank you so much once again for being a wonderful audience, and thank you, Kelvin and Ola, for being part of today's show.
Thank you.
Thank you.
All right, thank you so much to the wonderful audience and for all your questions. Meanwhile, take care, stay safe, and see you in our next webinar.